Welcome to Lincoln County Living, the podcast where we keep it real, keep it local, and maybe even keep it a little awkward sometimes. I'm your host, Nicholas Hall, and every week we dive into the stories, tips, and laughs that make Lincoln County the best place to live, work, and play. Let's get started. Hello, everybody. I'm Nicholas Hall with the Lincoln County Living podcast, and today I'm here with Dani Alpers. She is a loan officer with Gateway Mortgage out of Alamogordo, and we're going to ask some questions in terms of loans, interest rates, types, and any tips that Dani may have for people that are looking to purchase a home. So, how are you doing today, Dani?
I'm great, Nick. How are you?
I'm doing great. So, I got some questions for you to kind of get to know you a little bit before we start all the nitty-gritty stuff of like the loan types and everything like that. So are you originally from New Mexico?
I am originally from Alamogordo, New Mexico. Born and raised in Alamogordo. I went to college in Las Cruces, NMSU. I worked in Las Cruces for several years, came back to Alamogordo, started working in the car business back in the 80s, helped customers with financing, and now I'm here.
Yeah, it seems like a pretty common industry for real estate professionals to start in is car sales and car financing and everything like that. Just because you were doing the loans on the cars, that what got you into the real estate industry?
Yes and no. So I had a really great following in the automobile industry. I was actually financing into my third generations of customers. And real estate was just always the next step. If you're going to do something different, real estate is, the magic thing to do. Sonia Roberts was a client of mine. I had a lot of real estate clients, and they all talked about the industry and how great it was. So I took the leap of faith, and here I am.
Yeah, and it's the industry that'll probably never die. So
no,
I mean, you got a lifelong career with that. What is one thing you want people to know outside of work as a loan officer about you?
I've been in the community forever. I understand our military. I have a love for our Air Force Base. I know how our community works. I know how important Alamogordo, Ruidoso, all of our counties are for each other. I understand our income patterns, and I think we have great potential for first-time homebuyers, VA loans. We have a good, diverse loan client base. People just don't tap into it, I don't think.
So what's your favorite part about, I guess, in Lincoln County, of course, but of course in Otero County as well? What's your favorite part about those counties?
Lincoln County has those beautiful homes in the mountains, and then at the same time, you can be right there in the village. You can go to the ski area and go skiing. You can come down to Otero County and have, just all types of homes available. We have mountains, we have water, we have everything all in one area. We have all four seasons in this area.
Yeah, correct. And I mean, there's lots of snow on that mountain right now. So it's going to be a good ski season at the start.
I'm excited.
Yeah, we are excited too. So let's go ahead and get into the loans and everything like that and get started with the stuff that may bore some people, but we'll try to keep it interesting. So let's go ahead and talk about loan types. I know that there's several loan types, and one of the questions I get asked quite often is the difference between them all, especially when it comes to like FHA or VA, those kind of things. Like what's the difference in those type of things? So can you kind of talk us through the main types of loans that people tend to use?
So VA is a loan program all by itself. You must qualify to be a VA loan borrower. National Guard, reserves, active duty, retired, and that's really it. You've got to qualify to be a VA borrower. FHA is much more common. They are much more forgivable with FICO scores. You can actually have a 580 FICO score and qualify for an FHA loan. The required down payment for FHA is 3.5%, so it's a lower payment typically. Conventional is stricter. They're stricter on their FICO scores. They like those higher FICO score models. Usually a 5% minimum down payment is required for conventional loans. You can do a 3% conventional first-time home buyer, but they're very difficult to qualify for. Your credit score has to be great. Your debt ratio has to be great, which is why we use a lot of FHA loans because it's just a more forgivable loan product. You can actually be a little bit higher on the debt ratio with an FHA loan. So your lender should be able to guide you through most of that. But the FHA product, conventional product, both excellent for first-time homebuyers. They just look for different qualifications.
So if you were to suggest a loan to a first-time homebuyer, of course, it would be the FHA, correct?
Yes, I would. And that's usually where I start, is with
Okay.
the FHA.
And just a question to ask about an FHA loan. Are those interest rates usually higher than a conventional?
Actually, no. FHA loans typically have better interest rates as a whole. Now, if you're a 700 FICO score conventional borrower buying your second or third home, you have a really deep credit history, you're probably going to get a much better interest rate with conventional versus FHA. But if you're first starting out, that FHA loan interest rate is going to be much, much better to qualify with.
And for the people that are kind of unaware with how the interest rates work, how are the interest rates determined?
So interest rates are all determined by you individually, with the exception of MFA, and I'll get into that in just a second. But your interest rate is based on your FICO score, your debt ratio, your debts going out versus your income coming in, the type of home you're purchasing. A manufactured home will price differently than a site-built home. So there's a lot of factors that go into an interest rate. It's not just, well, what is the VA rate today? What is the FHA rate today? Rates are very individual to that person. What is your debt ratio? What type of a home are you purchasing? Now, the first-time homebuyer program, MFA, in New Mexico, they have a very general program. It's one interest rate for FHA, one interest rate for conventional. And it doesn't matter what type of home you're purchasing. So you can purchase a manufactured home or a site-built home, and your interest rate is the same. You can have a 42% debt ratio or a 30% debt ratio, and your interest rate is the same. So that first-time homebuyer program is a great program and maintains that interest rate across the board. But if you're not using that program, your interest rate is based on your particular scenario.
And for those that are kind of unaware like myself, honestly, what does MFA stand for?
I knew you were going to ask me that question, and I can't think of it at the moment. Sorry. I just always call them MFA. They are out of Albuquerque, and actually, that's where our underwriting happens, is in Albuquerque, and the loans eventually go to Idaho Housing Finance.
Okay, so that's something that somebody could always call and discuss with you and kind of get some more information on that if they're interested. So do you have any tips for buyers that are trying to secure a better interest rate?
So if you're really looking to secure a better interest rate, you should really get a look at your credit first. And you can do that through various ways. You can use Credit Karma and just see what your credit looks like. The biggest problem borrowers have with their credit is their revolving debt. They pay their revolving debt on time, but they maintain a balance that's close to that credit limit. So even though you're making those payments on time every month, you don't have a single late payment. If you have a $3,000 credit limit and that balance hovers at $2,800 every month, it lowers your FICO score, which of course affects your interest rate pricing. So the best thing to do is, even though you may make your payments on time, you're frustrated with your score because it just doesn't go up, you just don't get an increase, it's likely those revolving debts that you have on your file. And that's the one thing people should review first. Where am I on my credit card debt? That's the biggest issue.
Yes, I completely agree with that. And I know it's kind of difficult for some, but if you could make extra on your credit card payment instead of paying the set amount, if you could pay like $100 more or $200 more, that also helps your credit go up. So, and try to reduce the amount of debt as much as possible as well. Like, don't go buy a new car when you're trying to buy a house.
You must really be still with your credit. Don't
Exactly.
get new credit.
Exactly. So let's go ahead and talk about some advice for first-time home buyers, because I know there's a lot out there. And for first time homebuyers, getting a loan could be a really scary process. And it's a lot of information to intake, especially if you don't know what's going on. What's one piece of advice that you would give to somebody that's applying for their first loan?
So what I see is people come to me and they've read things on the internet. They have friends who maybe bought a home and this was their experience, that was their experience. They think there's grants. They don't know the difference between the grant and the down payment assistance. And they have a lot of information, but not a lot of facts and how it all works together. And what I tell people who call me is I can give you all this information all day long over the phone. But when you're trying to talk about escrows and debt ratio and homeowners insurance and how the first time homebuyer program works, it's too much information. It's overwhelming. And what I do with most of my first time homebuyers is we get together in person in my office. We have paper in front of us. We write down notes. We play with different loan amounts. I show them what an escrow means. And it is so much easier. You see the light go off with borrowers. And it makes them so much more educated about what they can afford and what they're actually going to get with that program.
Yeah, and I completely agree with that. And I think, you need to talk to a loan officer because like I use this analogy all the time. When you're going on the internet, if you're not feeling well and you type in your symptoms and it's going to pop up all this mumbo jumbo that probably doesn't even pertain to you. And of course, you'd want to talk to a doctor because a loan officer, a real estate professional, we're all licensed professionals in that field and we're experts in that field and we can debuff, whatever term you want to use, any misconceptions about loans and everything like that. So that is some very wise advice for those that are getting their first loan. So are there any unique programs or incentives in our area that buyers should know about?
So the constant down payment assistance program is always the 4% in assistance. That never goes away. That's an interest rate. It's a 4% of the sales price that you're purchasing for closing costs. Right now, MFA is offering the $10,000 down payment assistance. And those funds are available until they're depleted. So it's something you bring up cautiously because it may not be here in 6 months. But right now, there's that $10,000 that can only be used for your down payment. But it's a great tool because it lowers your your loan amount immediately by $10,000. You do have to pay that money back. It's not free, but you pay it back at no interest over 15 years. So it's a very affordable payment. And then at the first of every year, MFA has allocated their funds. They go out and get funds all year long for these first-time homebuyer loans. So the first quarter of the year, there's always different incentives. Last year, it was $25,000 down that you didn't have to pay back. So again, those funds are available until they're depleted. So there's always something new with MFA, which is why you should talk to somebody without just reading it on the internet.
The internet has a lot of information, but it's also a scary place for a lot of people. So it's both good and bad when it comes to these kind of situations. And I completely agree with everything you said. And some of those incentives sound pretty unique, and I might actually refer some of those to my clients as well. So what makes the difference with working with a local lender rather than somebody that's out of the area?
There's a couple of things. Number one, with a local lender, you're always going to get that same person on the phone. You're always going to get me on the phone. Some of these online lenders, some of these nationwide lenders, they're call centers really, and you're going to get whoever is next. And they may not be completely familiar with your scenario and what you've talked about with somebody else. And that can be the frustrating part for borrowers when they're not dealing with somebody consistently.
Let's talk about some personalized insights that you may have on the market. Based on your experience, what's one thing that buyers overlook when it comes to loans or financial planning for a home?
So the one thing that they really don't think about is utilities and how those utilities are going to affect that mortgage payment. They get so focused on the mortgage payment, they don't realize, homeowners insurance and property taxes are a part of that payment. They're so busy trying to qualify for that payment that then they have to stop and say, well, wait a minute, I still have internet. I still want to do my satellite. Now all those things are extra that they didn't think about with that mortgage payment. And so when we talk about their debts, it's about, sure, this is what you have on your credit file, but what about groceries? And what is your gas going to cost you? And how much is your vehicle insurance? So take all of that into account, because everybody has a very set budget. And when they start talking about a house, they want to be at $1,000 payment. And then with taxes and insurance, it's $1,200, which is maybe only $200 more, but it's $200 more than what they were considering. And now they have to think about gas and food and eating out. And that's the one thing they don't take into account all the time, which is what I do when I talk to people. How are you going to live with this payment? Because now you've also got maintenance on your home that you didn't have before.
Yes, and that's kind of an uncomfortable conversation to have with people sometimes, because they get a little, I think it scares people at times, but it's one of those real conversations that you got to have with yourself, is that, can I afford to live on top of paying for this home? And a lot of people have car payments, or they still have that lingering credit card debt that we talked about before. And there's a lot of things you have to take in consideration when you're purchasing a house. And I know going at the top of your price range isn't always the wisest choice, because that means that you're gonna have these issues that we just talked about. And I know myself, I like to go out and eat every once in a while, but if you can't afford it, you can't afford it. And there's just, there's things to take in consideration in that front.
Your life has changed for sure.
Yes, but it's also a good thing too, because you have home ownership. You're not paying rents. You can do whatever you want to your house. There's a lot of things that are pros to that as well. So on to the next question. What are some hurdles that we are having in our current market with getting a loan, getting it to the closing table, anything of that sort?
So the biggest hurdles that we've had have been homeowners insurance. The premiums that used to be $800 yearly, a year ago, are $1,200 and $1,300 and $1,500 yearly. And that can make a big difference in a borrower's payment, because that's forever. You're always going to have to insure your home. With our mountain homes, we've actually had some insurance companies that wouldn't insure their home at all. So we've had to get pretty creative, I guess. Maybe that's not the right word. We've had to reach out to new agencies that we've never dealt with before. I have discovered Farm Bureau in Las Cruces, for example. They have been great for insuring some of our mountain homes that I would have never considered before. Some of our local agents they're pulling back a little. Farm Bureau didn't take, a lot of those losses up there with the fires, so they're actually willing to start loaning or insuring some of those mountain homes that I've been seeing. Flood insurance, I've been noticing, is great out of Goosehead, a new company that I've discovered. And I've been able to pair lower flood insurance with homeowners insurance with Goosehead, making the payment more affordable. So you can't get stuck with what you constantly have to look for new vendors, new ideas, people that walk into my office and say, I'm a new agent in town. I take their card because I don't know, they might be a solution for a borrower down the road. So you always have to have your ears open for new people, new ideas. You can't get stuck with what you know.
Right. And I mean, you said the term creative, and I'm a firm believer that in the real estate in the real estate industry, apologize about that, you have to be creative at all times. Some things are going to get a little haywire, and you got to come up with different ideas and different ways to make things work. And, if it requires us reaching out to an insurance company that we've never even heard of before, or an insurance agent that's completely out of the area and has no idea about the area, then we got to do what we got to do. And I know you were saying that the insurance premiums have gone up. Is that for Lincoln County, or is that just insurance in general?
That's insurance in general. Even some of our smaller homes in Otero County that are less than 1,000 square feet, I'm seeing $1,200 yearly premiums for those homes. And, there's no reason for that. So you do have to shop that borrower's insurance for them. They don't always know what to do.
Right.
Same with the mountain properties. We just have to help our borrowers shop. I have a borrower in the mountains right now. He was being quoted $8,000 a year on his insurance, $8,000. And it was causing him to think maybe he shouldn't buy this home. And we found him a premium for $2,000 a year. Still not a great premium, but my goodness, same coverage, great insurance company. So borrowers can get frustrated. They don't have the connections that we have. So we have to be willing to help them with that sort of thing.
And I'm pretty sure that your insurance gets built into your loan, correct?
It's escrowed, yes.
It's escrowed into your loan. So it's kind of all built together in that same monthly payment. So that's
Yes.
another thing you'd have to take in consideration when it comes to, can I afford this home?
Absolutely.
Is, can I afford the insurance too? Especially in our area after the recent fires and the floods and everything that have come to pass. It seems like Ruidoso and everybody's getting back to kind of like a normal state. But these are things that you have to take in consideration. So I guess that's pretty much it. We've covered all the questions. I tried to do a Q&A, but nobody's really interacted with that just yet, I think, because this is so fresh and so new. But I'd love to have you back on the show again eventually, and we could do the audience Q&A and try to get more people to collect some questions on that, because I feel like there's a lot of questions out there, and I need to figure out how to get people to interact with that. We talked about a lot today already, but what are your top 3 tips for someone right now? Like if they were thinking, I want to buy this house, what is your top 3 tips for them right now?
So what I tell people when they call me initially and say I'm in the market to buy a home within the next 6 months, I tell everybody the same thing. Check your credit, check your revolving credit. That's a big deal. When people tell me, well, I have good credit, but I have a credit card that I didn't pay on time, or I had a utility bill that might have gone into collections, but that's not a big deal, is it? Well, yes, it is, because those smaller debts that you don't pay on time, you're asking an underwriter to loan you $100,000, $150,000, but you didn't want to pay an $80 phone bill. That devastates your credit score. So people don't understand how those small, unpaid, overlooked items can affect your score. And so you have to be real and honest with yourself when you're wanting to go in and get a new home. Pay attention to the details, the small things that you didn't pay on time. Those can sometimes cause you to have a higher interest rate, need more money down. That's the one thing I tell everybody. Look at your credit, even if it's on Credit Karma, and don't disregard those smaller things that didn't get paid. Student loans are a big deal, even though they're in deferment. Just because the government says you don't have to pay those back right now, for a mortgage loan, I still have to put those payments into your debt ratio, because we all know you're going to have to make those payments eventually. We can't pretend like they don't exist. So 1% here, if you have a $50,000 student loan, I've got to budget you for 1% of that payment, even though I know you're not making that payment. And that affects your debt ratio, which affects your interest rate. So if we can get a look at your whole credit picture, we can get so much better information and get you in line sooner with paying down a credit card, getting a student loan back into payment status, so that you go into underwriting with no excuses. You've taken care of all of that. Now we're ready to go in with a very, very clean file.
Right. So basically, to wrap all that up, is that you need to take care of your business before you decide to do business, because it'll catch up to you really quick, and it would be really sad to get really close to the closing table and find out, hey, I can't get this loan. And it's kind of heartbreaking when that all happens. But that'd be my advice too, is to take care of your business before you do business. So I do have a specific scenario that I want to run past you as a real estate professional. What advice do you have for self-employed buyers, or those with non-traditional income?
That's a great question. And there are a lot of COVID introduced self-employment to a lot of people that wouldn't have considered it otherwise. And they've turned some of these businesses into great businesses. But with self-employed people, what we all do, my husband is self-employed, so I understand this thought process very well. You take your income, but everything's on you. So when you file those taxes at the end of the year, you want to recoup some of those expenses. So you want to write off your gas and some of your expenses for your vehicles, and expenses for employees. And at the end, on your line 31 on your Schedule C, that income that you're going to pay taxes on, that's the only income I can use to qualify you with. And I need a 2-year history of that. So it doesn't matter what you grossed. It doesn't matter that you had the best year of your self-employment history. If you wrote off 70% of your income, that's all the income I can qualify you with. Ever, ever, ever. There's no excuse or no exceptions. And I need a 2-year history of that. So when you're talking to your accountant, and hopefully you have an accountant if you're self-employed, don't try to file your own taxes when you're self-employed.
Always have a tax professional that can help you with it, because it gets really confusing really fast. So
it does. And if you tell that accountant, I'm going to buy a home, I want to purchase a home in 2 years, they can help manage those tax returns so that they show as much positive income as possible, so you can go in with a great qualification. Otherwise, you've got to wait 2 full years to show positive income that you can use for qualification.
And as a self-employed individual, and my wife is a self-employed individual, it is very difficult to keep track of expenses and stuff like that. I mean, there's apps out there. There's one called Mile IQ we use all the time. It's to track your mileage, and it shows how much you spent and how much it would cost to go that far. If you get a new car, make sure you write that off. If you have any like coaching expenses, for instance, you can write that off. You get a new chair at your desk, you have a home office, anything like that, just don't go too crazy with it if you're trying to buy a home, because then it starts going into the red instead of the green, and it makes it to where you have to wait another year. And I know some of us don't want to wait. So
that's right.
So let's talk about the current interest rates, and you can correct me if I'm wrong right now. I just Googled this here just a little while ago. Right now, a 30-year fixed rate is at 6.92%. Does that sound correct?
They are close to 7%. That's correct.
Yeah. And they've gone down a little bit, I'm pretty sure. But do you see them going down anytime soon, or are they just going to continue to go up?
So the Federal Reserve has verbally committed, with the previous presidential administration anyway, that they were going to lower rates. With 2025, because jobs weren't quite as expected, the health of the economy wasn't quite as expected, I would anticipate the Fed is going to continue to reduce rates. They have to stimulate the economy, and doing that with lower interest rates across the board is the best way. Making homes more affordable with lower interest rates is the best way. So I would anticipate the first quarter of 2025, we will see a rate reduction. Now, when we say, a quarter point, that's significant for a lender to try to get a borrower approved. MFA, our down payment assistance program, follows those rates as well. So it's better for everybody. But I do expect rates to continue to drop. You're not going to see significant drops, but
not like during 2020 and COVID or anything like that. I don't see rates going back down to that percentage for a very long time, if they ever do again, because that was just impressive in historical numbers.
It was, and we can't keep thinking about that, because for a 4 or 5% interest rate for a mortgage, that's a healthy economy. People can afford that. When you're talking about 6 and 7%, it makes it harder. You can still refinance your loan. So if you want to purchase that home now because it's the perfect home, even though the rate's a little higher, refinancing is always an option. So you're never stuck with that interest rate. You can always refinance it down the road.
Yes. So if you need to buy a house now, we've always suggested buy it now, wait later down the line, refinance, and get your mortgage payment down, because it's always possible. And I know there is incentives for somebody that's using a VA loan that can get their interest rate down, or they can go without paying taxes too, I'm pretty sure, on the property. So there's a lot of ins and outs that I would definitely give your mortgage broker a call, your mortgage officer, as well as Dani Alpers here. I mean, she's very educated, and she's been doing it for a while. I mean, I'm not sure, how many years have you been in the mortgage business?
I've been in the mortgage business for 8 years, in the finance industry for 30.
Okay, so she knows her way around the paperwork and the ins and outs. So I would definitely give Dani a call. So we're going to go ahead and wrap this up, though. And I thank you so much for coming in and sharing your tips and your insights on the real estate market today, and coming in and joining us on the early stages of this podcast. It seems that we have a lot of interest in it, and I feel like we're going to have great success with it. And I think it'll help our community as well as the community surrounding Lincoln County in terms of what New Mexico is, because I feel like we get forgotten a lot of the times. And I feel like we need a big shout out every once in a while, and it just seems like nobody wants to do it. So I'm going to give it my best shot. But I do thank you for coming on today and sharing all those helpful tips. I feel like if I share this even with my clients, we're going to have a lot of people kind of get off the fence, for one, or kind of bring their stress and anxiety levels about buying a home down a little bit, and kind of like, okay, this isn't as bad as it seems. There's just a lot of big words and abbreviations that I don't know what they mean, but I can always ask. So if you want to go ahead and give yourself a shout out, Dani, and kind of talk about where you're at for our audio listeners, maybe give your phone number so people can give you a call.
Thank you. Sure. So my office, my brick and mortar office, is in Alamogordo. My company name is Gateway Mortgage, but I'm very mobile. We do loans in all states except California and New York. So I have a large following with my borrowers, especially my VA borrowers who go purchase homes in other states. I can go with them. I can help them with that home purchase. We have all the loan products available here through Gateway, to include rehab loans. I mean, we didn't even touch on a rehab loan, which means you can purchase a home with problems and actually.
That'll be on our next episode. We'll do that on our next episode.
So we offer the rehab loans. We offer HELOCs. We offer bank statement loans. So there's a lot to do when you're dealing with a lender. Even though you may have a question about what type of a loan you would qualify for, that's what your lender is going to help you with. And Gateway has a great array of products. You can Google me on Gateway and find me in Alamogordo, or my cell number is 575-442-1209. And that's the best way to get a hold of me, because my phone is always with me.
And if I'm being completely honest, from a real estate professional, when you call Dani, if she doesn't answer, she calls you back, for one, which is always good in a loan officer, because they don't always do that. And if you have any questions, even if you're not looking to get a loan, Dani's going to help you. She's always here to help, and she's very responsive. She knows her stuff. She's on top of the loan process, and she's going to help you any way she can.
Thank you, Nick.
You're welcome. You're welcome. So if you're in the market for a new loan, or, getting a new home, always give Dani a call. So as always, if you enjoyed this episode, don't forget to subscribe or follow wherever you're listening in from, and share it with your friends, and hopefully leave us a review on some of those platforms that allow for that. And your support helps bring this great content to Lincoln County and the surrounding areas. So next week, I'll be meeting with Katie Thornton with the Lincoln County Humane Society, or the Humane Society of Lincoln County, and we're going to talk about the importance of pet adoption, because recently with the fires and the floods and people not getting their animals neutered and everything, the Humane Society up here in Lincoln County has a lot of animals that they need to give good homes, and we're going to discuss the importance of that. But thanks again for tuning into the Lincoln County Living, and thank you, Dani, again for joining in. Hopefully we'll have you on here again real soon, and I hope everybody has a great day.
Thank you, Nick. I hope you have a great day as well.
You've been listening to Lincoln County Living, where we keep it real, keep it local, and sometimes keep it awkward. Don't forget to subscribe, share, and come back next week. Until then, stay awesome, Lincoln County.